I continue to save some of my liquidity in gold. I don't own it because I think it might go from 2,000 to 2,275. I own it because if faith in the system gets shaken, I'm afraid it's going to go to $8,000 or $10,000. I'm afraid that we revisit 2008 in some fashion. I'm interested at these conferences to talk to gold bugs who rub their hands gleefully and chortle about the fact that gold could go to $6,000 or $7,000 or $10,000. The circumstance that would cause that would be so damaging to the rest of your portfolio and to your lifestyle that it isn't something that you should be happy about.
Rick Rule is a highly renowned and seasoned investor, speculator, and founder of Sprott Global Resource Investments, a global alternative asset manager focused on precious metals and other commodities. According to Rick, a frequent speaker at industry conferences and interviews on natural resource investments, this is the best time to be an investor in the natural resource space. Rick believes that as a result of various economic and macro factors, the demand for precious metals like gold and silver will quadruple in 2024 as soon as the rest of the investment world realizes the master plan. This purported master plan has been the core subject of several precious metals-related interviews and conferences since central banks started buying at an almost unprecedented rate in 2021. For decades, these apex banks sold their metals and loaded up on US Treasuries. So, their sudden policy reversal drew the attention of several well-known investors and commentators in the space. It didn't take long for experts like Rick to connect the dots between the extremely chaotic economic conditions in the United States and central banks' sudden urge to move away from the dollar and into precious metals like gold and silver. Rick is optimistic that in no distant future, central banks will not be the only ones buying these metals at an unprecedented rate. He believes more investors, including money managers, pension funds, family offices, and others, will hurry to increase their exposure to gold and silver as a result of the gloomy economic conditions in the United States and other economies. Rick believes we could soon see a quadrupling of the demand for precious metals, which will be immediately followed by significant price increases. We will now bring you clips from Rick Rule's recent interview with Goldcore TV. He talks about central bank accumulation, why silver is a lifetime opportunity, and his biggest fear about gold and silver prices in 2024. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos. You can also check out our other videos on gold, silver, and other precious metals. Thanks, and enjoy the video.
I think many entities, governments, corporations, and individuals are concerned about the overreaching nature of the American political machine. I myself like to save outside dollars, just in case, and I'm no government. Certainly, as I say, while the governments trust us less and less, for good reason, they trust us more than they trust each other. And certainly the move to gold, I think in many senses, represents, first of all, their understanding that getting paid a negative interest rate and assigning seigniorage to a country like the United States that's trying to exert undue influence is both stupid and negative. I think they also understand that if they are going over time to utilize a medium of exchange that isn't the US dollar, that gold is the only one that they can do it in. I notice, as an example, the BRICS currency, which many newsletter publishers are selling circulations on based on the fact that it's going to destroy the dollar. My suggestion is that's absolute hogwash. Doug Casey again. The dollar is an IOU nothing. The euro with 17 or 18 countries is a who owes you nothing. The BRICS is a nobody owes you anything. Can you imagine a fiat currency that would operate between, as an example, India and China with open hostility on their borders? Can you imagine the Chinese running a large trade surplus with the Russians and presenting a bill at the end of the year for settlement? This is all silly. I suspect, despite all of its flaws, that the U.S. government will, for the rest of my life at least, remain the world's reserve currency, the world's settlement currency. I'm not arguing that that's a good thing, although as an American, for me, it's a wonderful thing. The idea that we have the benefit of seniorage and we can export our idiocy to countries around the world who have no alternative because the other forms of idiocy are greater. For me, that's a wonderful thing until it ends.
Where do we go from here then?
I don't know where we go. Where I go is that I continue to save part of my liquidity. And by the way, I believe in liquidity. I continue to save some of my liquidity in gold. I don't own it because I think it might go from 2,000 to 2,275. I own it because if faith in the system gets shaken, I'm afraid it's going to go to $8,000 or $10,000. I'm afraid that we revisit 2008 in some fashion. What would cause it? I don't know. I'm not that smart. And I also maintain US dollar liquidity, but in very, very, very short-term instruments. I understand completely that I'm getting 4% in a currency that's depreciating at 7%, that I'm losing 3% of my purchasing power a year. I consider that negative interest rate personally to be an option premium, so that if the liquidity squeeze that I'm afraid of occurs, that I will be able to take advantage of it rather than being taken advantage by it.
During his interview, Rick also discusses the importance of silver, one of the most popular metals in the world, serving the dual role of being a monetary and industrial metal. Silver's popularity is only second to gold's as a monetary metal. As an industrial metal, silver is used in the making of many everyday objects, including jewelry, silverware, coins, solar panels, cell phones, and several others. We could go on and on about the many uses of silver, yet silver prices cannot be said to be particularly commensurate with the metal's value. Silver reached an all-time high of $49.51 per ounce in April 2011. More than a decade later, not only have we failed to get anywhere near that high again, but silver prices are now down to $23.04, an over 53% decline from previous highs. Yet, renowned investor and speculator Rick Rule believes that the white metal is a generational play that could and would fetch investors a lot of money when the right time comes. According to Rick, for every reason not to invest in silver, there are several others to keep faith and continue stacking until the story changes. Let's get back to the interview.
I see silver as a more speculative asset, and I own some. Usually gold leads the precious metals bull market. The narrative has to be established by gold. But when silver follows through, it goes further and faster. I am a speculator. The money I now invest carefully, I made by speculating wildly. And I do own some silver. But I own a lot more gold than I own silver because I'm motivated at present much more by fear than by greed. I'm interested at these conferences to talk to gold bugs who rub their hands gleefully and chortle about the fact that gold could go to $6,000 or $7,000 or $10,000. The circumstance that would cause that would be so damaging to the rest of your portfolio and to your lifestyle that it isn't something that you should be happy about. My lifestyle's really good. And I hope, however old I am, David, when I shed my mortal coil, that right before that I look back and say, you know, all that insurance you bought, all that gold you held was a mistake. Because that means that I lived a peaceful, uneventful life, which is what I would prefer to live. I'm concerned about the arithmetic around the world's finances. I'm concerned about the debt.
Specifically, what are you concerned about?
Well, you know, the big thinkers say we owe it to each other. Well, that's not true. The spenders owe it to the savers. And at some point in time, the spenders are going to have to renounce. They are either going to default honestly, saying times are tough, we're not going to pay, screw you, strong letter to follow, or they're going to inflate away the obligation. But in either sense, an actual or a tactical default, there will be consequences. There will be consequences in liquidity. There will be consequences in confidence. There will be consequences in politics. I don't know what they'll be. I'm not an economist. I'm not a political scientist. I'm a credit analyst and an investor and a speculator. So all I can do is prepare myself psychologically and financially to do my best to be available in all sets of circumstances. how I do that is going to be different than the way that somebody else might do it. If there's somebody who is a electrical engineer or something and is up on all these latest technologies, he or she may be better able to speculate or invest in enhancing other people's lives through technology. It might be a viable investment strategy for them. It's not for me. I can't pronounce most of these businesses, let alone understand them. What's important is two things. Stock selection is important, but the other thing that's important is a contrarian attitude. You have to invest in the sector or in subsectors when they are out of favor. This is a capital-intensive, cyclical business.
Mm-hmm.
The cure for low prices is always, David, low prices. Mm-hmm. The cure for high prices is always high prices. I remember back 3 years ago when speculators thought uranium was a four-letter word. The price of the stuff was $20 a pound. It was costing the industry $60 a pound to make it. The uranium price had to go up or the lights would go out. Those are the only two choices. But because it hadn't performed for 2 or 3 or 4 or 6 quarters, people sold off an asset class that had to triple.
Mm-hmm.
Now that it's tripled, people are clamoring to own it. It's a reversal of the idea that you buy what's hot and the acceptance of the fact that you buy what's not. That will cause people to do well in extractive industries.
During the interview, Rick elucidates that countries have consistently failed to shore up the productive capacity of extractive commodities, instead focusing more on using up these commodities. With the world's massive 8 billion population rapidly urbanizing, Rick is certain that the demand for these commodities will continue to increase exponentially while the supply side will continue to fall short. In addition to the coming explosion in the supply and demand gap, another reason to invest in commodities now is to prepare yourself for the inevitable collapse of the global financial system and the eventual imposition of central bank digital currencies. A good example of what's coming for us all is what's already happening in China. As one Weibo user aptly puts it, Big Brother is not only watching you, but also your wallet. There have already been lots of reports about the Chinese Communist Party using the digital yuan to continue its oppression of citizens and crush dissidents. Though it might be more subtle in the democratic West, the results will be the same. Absolute control and power overall at the push of a few buttons. What are your thoughts on Rick Rule's bullish prediction for commodities in the long term? Please leave your comments and observations in the comments section. Give this video a thumbs up and subscribe to the channel for more videos. We appreciate the support.